So today I want to just go over what's a dividend. A dividend is a payment from a company to a shareholder, basically for just investing in the company and being part owner of the company. You get to share in the profit that that company produces. That comes back to, what does it actually mean when you own a stock? When you own a stock, you actually own part of the company that you're invested in. As the owner, you get a bit of the profit. I just have here an ETF, which is basically a basket of stocks and other underlying securities, and they can also pay dividends. So we have quarterly dividends on this particular stock, and if you come out to distributions and yields, the dividend payment will be listed here. So it's about 40 cents. The pay date was on July 1st, and the ex-dividend date was on June 26th. So what it means by the ex-dividend date is if you held a share of that company or this ETF, it's an exchange-traded fund of multiple companies, you are then going to receive a payment on July 1st. That doesn't mean you have to continue to own the stock after June 26th. You just have to be the owner on record on June 26th. If you sell the stock on June 27th or 28th or 29th, it doesn't matter, you're still going to get paid the dividend. Your distributed yield and the SEC yield, so this stock basically pays about 2.8%, 3% each quarter, or at least the previous quarter. And this just means that it's the dividend divided by the kind of the average value over the previous month, plus any capital gains that they had, multiplied by 100%. So you can have appreciation of the security as well as you can get dividends. And the thing that's really great with dividends is that you don't have to buy and sell and trade back and forth as you go. You can just hold that, and they basically pay you every time there's a dividend. So that could be monthly, that could be quarterly, sometimes it's annually, some don't. Anytime you invest in anything, there is always some amount of risk associated with it. Generally, the higher the risk, the higher the potential reward. Note that I say potential because you also have the potential loss of losing everything you put into it. Nothing is guaranteed. Some things are safer, but not safe. There's always risk when investing. If you need money within the next, say, 10 years, your money doesn't really belong in the stock market. It belongs in something like a CD or a savings account or money market or something like that, something that's federally insured. But if you can let money sit, say, for over 10 years, then yes, I would invest in the stock market. Well, I hope that helped you out. Hopefully you learned something new. And if you have any questions or comments, please leave them in the comments section and I'll get back to you as soon as I can. Alright, well, thank you. Have a great day.